Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at the weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed. First of all, so this morning we've got a couple of things going on. We've got some nice stuff out of Boeing and Apple, but when I look across the markets, I'm starting to see some weakness that's not showing up. So what I want to cover off today, a little bit different, but I want to go through some of the clues that I look for in the market and things that kind of tweak me that the direction might be changing, and hopefully those will be helpful for you. I'm going to look a little bit at the McClellan oscillator. The Swiss franc is interesting today, but usually I could put the word currencies in here, but I like to be aware of the currencies and the changes they're making to see if there's some clues hiding under currencies. Sweden is interesting. At one point in my journey on technical analysis, I would go through and I would literally mark down the position of a group of stocks, and I went through like 100 stocks every day, and they were country indexes. And one of the things I noticed is that EWD, the Swedish currency, or the Swedish ETF, would sometimes turn a couple of days or a day or two before the rest of them. And I think it's just because it's so small, but it also has, it kept the Swedish krona, so it's a little different than the euro. But anyway, sometimes there was clues there with Sweden, so I always have a little kind of twinge to go look at EWD and just see what's going on that chart. So I'll show it to you in a bit. Index positions and momentum. What I want to talk about there is, as the market moves, you want to keep track of momentum. And right now on the daily, the PPO is rolled over on a lot of the charts, but it hasn't crossed its signal line. And then whereabouts what is the position of the indexes? And we need to talk about that. So we're going to cover those off. And then, just some of the other ideas like oil, gold, bonds, industries, what's working. So that's a lot to cover off in one show. So we'll see if we can get through it. And of course, we've got small detail like the Fed meeting. So I think we've got lots to cover. Let's get into it. Okay, first of all, here's my Fed meeting chart. And what this chart does, and I should put on a larger cursor. What my chart does here is, in the back is the US dollar in green here. And this is the price action of the S&P 500. And these lines are the Fed meeting dates. And what you can see here, the black lines are when they've actually raised interest rates a quarter point or whatever. And so here we're expecting no change today, and we're on the Fed meeting day. But you can see that they've been, this was a couple of days before the reversal. This was at the reversal. This was right between options expiration and the rollover. And as you go through, sometimes the Fed meeting is more important than others, but this one I think is particularly fraught with friction, is probably the best way to describe it. There's we've got this downtrend across the top of the S&P 500 right as we get to the Fed meeting. There's so many reasons to be cautious here. Okay, so here's the advanced decline line. And what I want to show here is, if you just use the like the actual raw data, high-low data, what you'll see is we don't usually get above 100 in these rallies. So back in 2015, we spent time here where we couldn't get the number of net new highs. So new 52-week highs minus new 52-week lows, we couldn't get above 100. And then basically we just stalled in that range. So you'd get rallies in here, and then all of a sudden it would start to decay again. So the real question for us, obviously we've been down here for a while. This is our first run back up to the, from being deeply oversold, running back up. We're at the same level now. And so now what I'm watching for is just how does the market behave here? And you can see back in 2015, we spent 2 or 3 weeks with a positive, using a moving average rather than such jagged data. We got briefly into positive territory for a few weeks and then rolled back over. And here we are, we've been up here for about 2 weeks now. So just kind of starting to notice that things are at the place where we want to watch a little closer. If I go down and I look at the McClellan oscillators, What you see here is from a really high level, we've been pulling back. That's not all bad. And on the summation index, we're rallying off the lows. Well, we can always go back and just add more data here. So here's the 2008 period, and you can see we kind of got up around 500 and couldn't really get through that level. So we're there now. We're rallying up off these lows, and we're up at the 500 level. So now the real question is, can we initiate a thrust to get enough stocks participating to really get way up there, which is the start of a big rally, or do we actually have to roll over and pause a bit and then build some momentum and then fire back up? So the McClellan oscillator can help us with that. And if we just go look at this chart is for the New York Stock Exchange, and what you see here, it's trying to move up, and I've got on here market moves below 400 usually create a market pullback. Well, we're right around 400, so it's worth just paying attention. And on the NASDAQ side, it doesn't get that buoyant. Here we are up around the 0 level, and you can see back in 2007, the first rally where the market actually topped was around 0, and then all of the subsequent rallies stayed down at minus 200. So we're up a little better than that. In 2015, we got up to this 0 level, spent a couple of weeks here, and then fell back down. So it's that kind of stuff that we can just use as clues, but the bottom line is it tells us we're all getting very, very close. If we go look at the bullish percent indexes, which is I usually cover off on the webinar, so I don't want to bore you with the data twice, but you know, there can be some clues there as well. So when you look through this, this is the market summary on StockCharts. So you go to your dashboard, and right under the little chart in the middle, this is helpful. So this is the Dow sitting here, and you can just click on these just so everybody knows. But down underneath here is market summary, or over here on the side, you can scroll down and there's the market summary in here. Same place. Okay, so we get into market summary. And the thing to notice just quickly on these indexes, here's the 200-day, it's flat on the Dow. Obviously, Boeing and Apple are doing well, so nice day for some of the big names. And here's the NASDAQ composite, nowhere near its 200-day. New York composite, not quite near its 200 days. So this Dow 30 is a pretty good, you know, pretty important level to be concerned about. And here's the S&P 500. We've gone sideways since options expiration day. And that was this candle here, rallied up. And so now we're building this pennant. And the question is it a continuation pattern and we break out higher? We're getting the 50 crossing above the, or the, yeah, I think it's the 50 crossing above the 100 here. So these are important little clues, but the bottom line is we've stalled here for the last 2 weeks in the middle of earnings period. So that's a little bit concerning to me. Looking at some of the other indexes like the NASDAQ 100, sitting right on support here at the 50 and the 100, hasn't broken down or up. But again, even with this morning's good news, we still aren't able to take out the highs. So that makes it a little more concerning. Rolling through the sectors, there's not a whole bunch of them that are looking good. I will say materials is starting to try and change its tone and actually push higher here, which is nice. And the XLI, same sort of thing. But both of them still under this 200-day moving average, which just makes it more difficult or more concerning to watch. I don't like seeing the financials pause here. That's a big group in the S&P. And so if that was to pause and not quite get going, that would be a problem. So just going through these and just to make sure you know that you can scroll these up and down. The first list you see here isn't necessarily the only thing going on. So broker-dealers are usually an advanced indicator. They tend to lead the market. And what we don't like here is we've got this downtrend across the top of the broker-dealers, and this is obviously not making higher highs today and not even pushing the upper edge of the envelope. And again, it was this options expiration high. That's a bit of a concern. So anyway, that's one to just kind of put on the level, like it doesn't say sell, sell, sell or whatever, but it suggests concern. And here's the commodities, and they really haven't done anything for almost 3 weeks. Now, obviously, gold's been a little better than oil. But in general, copper hasn't done anything fancy. And so there's gold. Let me just grab these, and it keeps refreshing the page, so that's why this will move on you a little bit. But here's oil and oil services, and there's just not a whole bunch of clues there. In terms of retail, nothing really going on. It's been almost 3 weeks. Semiconductors, they're trying to make a move. They're getting up against their 200-day. And again, they've been some of the best performing industry groups for the last 2 or 3 weeks. And every weekend on my Twitter, I put out kind of the top moving industry groups. And that's just a quick thing to look at. It's helpful. But now let's get into some of these country ETFs. And emerging market ETFs are right at the 200-day moving average and trying to get through there. That's very important. There's a lot of clues there for us, and so we want to keep watching that. Here's EWC, which is the Canadian market, and we're actually making a new 3-month high on the indexes, which is pretty good. And the Canadian market is actually starting to outperform the US, which usually bodes well for commodities. Here's the China large cap ETF, and we're right at the 200. So much like the emerging market ETF, we're right at the 200. Now, I mentioned the Swedish ETF, and I think it's down here a little farther. What do you see here? It just can't break through. So it's doing similar things, but anyway, it's not breaking down yet, which is helpful. Now, we know that Brexit's going on in the UK, and that just seems to be a bull market move. So they haven't figured out which way it's going, but everybody thinks it's bullish. So that's okay. And Taiwan is stuck sideways in here, but South Korea is really doing nicely. This chart shot right up, but it's still stalled almost 3 weeks here at the 200-day moving average and prior friction. So it gives us some things to look at. Now, the bond market, I think we've all had so much of the inverted yield curve that nothing we really want to watch. Here's the 10-year rolling over again and working on the bottom side of the range here, where I would think it would be more bullish if it was going to start to, if the yield was going to go higher and the interest in bonds would drop. So this concerns me a little bit, and it looks a little bit like the Swiss franc, and I'll show you that in a second. So here's the 5-year note, and again, I'm just trying to show you places where you can find all of this together because it's easy to go through. And just quickly looking at these yield curves, right? This is just consolidated for basically since the beginning of the year. TNX not doing much, and then as you work through, and this one's just the 3-month, and what you see on the 3-month really since November, gone nowhere, no big deal there, but you can't really use that one to help us much. I find it basically just follows the local interest rate. So here's GLD and moving well. I'm not going to go through all the commodities, but the currency that I want to show you here is the Swiss franc. And the reason I want to show you is look what happened to the Swiss franc as the market topped. The Swiss franc really let go, came up, and what's it doing right now? It's trying to hold the bottom of this December-January low level. And that makes me a little more concerned that it's not holding up. And if this was going to start to break away again, maybe, and it's right at the 200-day here, that would be a little bit more concerning. And here's the Swedish krona, again, drilling down in the bottom corner, which would suggest strength in the US dollar, right, when these things are breaking lower. And the yen is another question mark after having a really, this is a big important breakout on the yen, and it's pulled back and it's just trying to hold around the 50, but I think it's probably going to break down. And then the euro, this is just chopped sideways for months, much like that Swedish krona, but there's no real clues there. The Canadian dollar is up slightly, and that usually bodes well for oil. The Canadian dollar and oil track each other, not day to day, but pretty closely over weeks and months. And again, the British pound sitting right around its 200-day, trying to break through this former resistance. Okay, and here's the McClellan oscillator just close up for the last 6 months. And while this looks concerning that it's pulling back so fast, it's from a very high level. And really, as long as it's above zero, it's pretty bullish. So working through some of those charts can just kind of, that's what I'm gauging. And a lot of people like to use the VIX. Larry Williams calls it the upside down S&P. And, again, here's this 3-month kind of level on the VIX. And if this 200-day moving average holds and it goes to the upside, obviously that would indicate that the renewal of the weak market, so the stock market will start to fall. And if the VIX continues to go lower, that's usually much more bullish. Right now, we're just trading in a sideways chop. Haven't really made money either way on that one. But it's a clue just telling us that the market is at a higher level of volatility than, say, way back in August, September. But at the same point in time, we're still just chopping sideways with no directional change. Okay, let's jump into a couple of things. I want to talk about the indexes specifically. One of the easiest way to do that is either from the member dashboard, using the little box in the middle, and I'm going to just go to the S&P 500 to start. And just so you know, you can click down here or up here, and the Russell isn't listed up here, but it is listed down here, same with these two. But you can click on that and that'll bring up a chart. And then if you hit that chart, it'll bring up a gallery view. And the gallery view, mine are customized. So, and you can go to Chart School to read about how to customize gallery view. But here's the Russell 2000. And you can just see we've still got this high from a week and a half ago in place. Lower high, now a lower high. So the real question is, what did we want to do? We see the momentum right at zero. And of course, we're going into the Fed meeting in a few hours. So here's the Russell, and the downtrend has been broken. We're up above the 50-day, but we're a long way from the 200. But what's concerning on this chart is the rolling over in momentum. Now, it doesn't mean that we're dead yet, but let's just say it goes sideways and then starts to reaccelerate. That would be fine. Didn't want to do that. So that's a concern. But here's the bigger issue. Here's the weekly view for the Russell, and what you can see is for 3 weeks here we've gone sideways with no net new highs, and we've got a couple more days this week to see if we can build on that. But the problem we're starting to get is the full stochastic, for me, these are things for me, is rolling over above 50 and below 80 isn't as bad as below 50, but when you roll over below 50, that's usually very concerning. And so here we have the PPO starting to turn up, but from a very low level. And sometimes if this angle of descent is too steep, you need something more gradual. What you'll get is a wave up, then a wave down, and then a smaller wave down right in here. And then you can kind of draw your trend line across there and see the momentum break. So over here, you see we have a really quick move down, a rally up, and then on this, after you first move below zero, it's usually a good time to be aware that the next high may be a top. And you don't know that, but you want to be aware of the big picture frame. And when the market gets so weak in a week to let the PPO go below zero, you have a problem. And the problem you have is now we have a market that's weak enough to break down. We don't know if it will. So we rally up, and in this particular case, we had 2 whole weeks where we got above maybe 3, where we got above 0 before the PPO rolled over. Now you can see the full stochastic rolled over. It made it up into 80, but even if it was to just roll over below 80, that would be a concern. So if we look up at price, here we have momentum coming down, and again, we rallied, and this is a pretty big rally, right? At least 10%, took us 8 or 10 weeks. We got up here, hit the 40-week moving average, which is equal to the 200-day, and then let go again. And you can see that this was a much more severe decline. And part of that is because your momentum is already weak and getting weaker. So rather than this first pullback on the PPO being the final low, it's not uncommon to get this wave up. And we don't know if this wave is just going to be a little wave or a deep wave. But when you draw your trend line across the top of here and you're starting to break these longer term trends, that's much more helpful. And so that's what I'm looking for is, if we've had a sudden plunge here, you still have to be respectful of the fact that this could roll back over into a deep decline. This is our first weekly PPO below 0, and you can see the full stochastic came down. And now if we were to roll over, I think you see the same sort of dynamic that we see over here. And the real question is, do we roll over right here? Do we wait a little bit, or do we actually get fully on board and get this big bull market thrust? So we're in that state of indecision. We're below the 40-week moving average. So all of these things suggest a lot of caution. On the point and figure chart, we're clearly in bear market mode. We haven't broken through the red trend line. Okay, so we can go up to the top here and let's just put in the S&P 500. And again, we've got this pennant pattern building, and what we don't know is which way the market wants to go. We've got lower highs and lower lows in momentum, and this is a 10-minute chart, but the whole idea is just to see what's going on. And again, we want to go to the daily, and you can just see there's an obvious trend line across the top here that we're having trouble getting through. And now with the Fed meeting today, maybe we'll make a decision there. Do we roll over and fail? And you can see back in here, this was the Fed meeting, and it was roughly 2 or 3 days where we didn't have any more momentum. Got to the first of the month. Remember how everybody wants the first of the month to be so bullish. Well, the 1st of October wasn't very bullish, and the 1st of December wasn't very bullish, and now we're sitting here at the 1st of February. So just watch the price action. Don't listen to the news as to what should happen over the next 5 days. Stay very, very focused. We're on this part of the curve, again, where momentum is rolling over from zero in a pretty important place. And now if we go up to the weekly, and this doesn't work as well here, this scooter works well when you have something tradable. So if I use the SPY here, for my gallery view, this scooter index would fill in and it would show the relative strength, but S&P compared to the S&P is a flat line. Okay, so anyway, you can see the downtrend, and now we've rallied back up, and the real question is, do we break straight through? And what happened back here in 2015 is we pulled down. About a month later, we tested the prior low. I don't know that that's going to happen. We had a little bit of a test right here. Anyway, we came back down, rallied up, couldn't make new highs, and then rolled over. And again, all of that action happened around the 40-week moving average, and we spent about 6 weeks there. You'll notice that it was the first time we went below zero, rallied up. We got all the way to near zero, and there's no reason it has to go that high or doesn't go that high. It can roll over down here, or it can get all the way back up. But it's when this momentum is kind of coming off deeply oversold and starting to pick up, is the news getting good enough for the market to continue to rally? And so it's this second pullback that usually is helpful as a better point of entry. And as we go along, I'd like to show you some of those charts. But you can see in terms of the point and figure pattern, we're rubbing against this bear market line. And if you don't break through to the upside, then it would, if we do break through to the upside, it would draw a new blue line under here. And if it doesn't break through, then it would just stay on a bear market signal. And so it made this red line when the price action was falling below this blue line. And now to get back into a bull market, we need to go back up through the downsloping red line. Okay, so in general, the problem we've got is there's a lot of charts that are set up right on the inflection point. So if we go to NASDAQ, and there's one reason to go there, you could just see we're in a more of a sideways range, whereas the S&P has a bit of a higher tilt on it, but this is the NASDAQ 100. And so, really 3 weeks now, we haven't done much. So we got above the 50 and we just continue to jog around that level. Well, our histograms are almost running out here in terms of momentum. So this is a cautionary place. And again, nobody knows the future. The only thing we know is the charts are telling us momentum is waning. And on the weekly chart, we're just barely above the 10-week and stuck below the 40-week. And the 40-week is now no longer trending higher. Well, that'll be okay. No longer trending higher. But the concern we have is if the NASDAQ rolls over here, obviously this would make our full stochastic rollover, and that's typically very bearish. And so we would actually expect more acceleration to the downside here. So I want to be quite cautious as we see this situation set up. So working through the different areas of the market, that gives us some clues. Now, if we just go look at Apple, let's update that chart. So it's trying to hold on to the gains it made overnight. And if we look at Facebook, when I last looked, it hadn't done much. When we look at Microsoft, hasn't done much. When we look at Google, it was a little better, or Alphabet. So it's just holding in the range. Amazon. So I think the point I'm trying to make here is these, the FANG stocks are the big names, Adobe. They're not really moving, and they're still stuck below their 200-day moving average. You can't really get going. it would seem to me that all of these would be able to kind of break above their trend lines here if we had some. Now we got Netflix, and it broke above its 200 and hasn't been able to do anything, and it's just consolidating here. There doesn't seem to be a lot of buying, and look at the volume falling off. So that's a bit more of a concern. And then lastly, we probably have something very volatile coming up in earnings here with Tesla. But what we see here is, it's still below its 200-day. The 200 days relatively flat. We don't have direction. All of these things add up to make the market uncertain. So you can trade it multiple ways. You can just pull back. You can stay in the market and try to have tight stops. And if you get kicked out, fine. You can put a hedge on. So if the market does start to move against you, you've got some protection, but you can stay in your position so you don't create capital gains. There's a whole bunch of different ways to do it. But the point I want to present this morning is that we have a really tight situation where we're up against all of the technical indicators that would say the market, when it gets to this level, will have friction. And the real question is, do we have the strength to get through it, or do we roll over? And if we roll over when momentum on a weekly chart is below zero, that is typically very fast moving. So, like here is Tesla, and it goes below zero right in here and then fails, and literally this part is a quick downtrend. And that's what happened in 2016, was everything broke down probably another 10% very quickly. So Tesla hasn't been bull or bear here, it's just been sideways. This was a bit promising because the wave on this one actually got higher than the previous waves, and now it's right at zero. So the question is, does Tesla fire up from here, or does Tesla roll back over? And this was like a final high, and we actually fall apart. One of the concerns I would have is that we haven't seen a lot of volume in Tesla recently. And so that lack of volume concerns me, that we don't have a lot of upside. Lastly, let's just look at XOP, which is the oil exploration and production, because there's some news out of Venezuela that we're talking about. And you can see we've got this big down thrust here. We still have no momentum to the upside yet. A lot of this stuff was getting above its 50-day moving average, but hasn't been able to do much. Now, if this rolls over below the 50 level here, that's extremely bearish. That's like back in here. So when you get these rollovers, it's an important place to watch for, and the full stochastic is one of the earlier clues on a weekly chart. So I would just say that right now, I pulled back some positions when we had our second 400-point down day within a week. I'm not holding very much right now. And the question is, if the market moves away from me, where would I go back in? But I still think you want to look into the gold, the China stocks, try and follow those and see if there's some opportunities there for you. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern on StockCharts TV. You can also catch up on the StockCharts YouTube channel or the StockCharts TV, which has a running list of technical charting informational shows. Thank you.
Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at The Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.